When will there be a recession and when will the market bottom? Well, in this video, I'm going to cover all of that and more. And if you get value while watching this, I would greatly appreciate you hitting the like and subscribe button. If you're new to my channel, my name is Jeff, no nonsense Sekinger. So let's go ahead and dive right in. If you are not living under a rock, you're probably pretty familiar with this graph, which is the M2 money supply here inside the United States. This is just to show you an illustration of the amount of money that has been infinitely printed. We've increased the money supply more than 50%. So out of all US dollars over the past just about 2 years, we have increased our supply of US dollars by over 50%, which is absolutely extraordinary. You can see how exponential this line has been, which has caused something called inflation. So we are at 40-year highs for inflation right now. As you can see this graph, the last time we had a high this close, it was all the way back in the 1980s where we were upwards of 15%. So now what is happening? And first and foremost, what is actually inflation? Inflation is simply too much money chasing too few of goods and services. So everything is supply and demand based, and even the US dollar and purchasing power of the US dollar. Unfortunately, what is going on is we are increasing the supply graph down into the right because we are infinitely printing more and more money every single day, which is debasing our currency, which means that the money in your bank account and in your brokerage account is not going to actually go down numerically, but when you go to a store or you pay for a service, it's going to cost more because there's more cash chasing not more goods and services. And that's a direct, supply and demand equation that you need to be aware of when we infinitely print money. If we don't also infinitely increase the amount of goods and services, well, now there's too much cash chasing too few of goods and services, which causes those goods and services to go up in price. Now, traditionally, we measure inflation by the Consumer Price Index, which is a basket of goods. And that basket of goods also includes, things like museum tickets and, what else? Milk and funerals and a bunch of things that I think don't really do a great way at gauging. So as you saw, we were, the inflation rate was right around 8.6%. But a lot of people think that is actually much, much higher than that. We're actually looking at a rate closer to double this. That would put us closer to right around 15%. But that's all speculative and we don't know for sure. And also different places of the world and different assets and different goods and different services have different inflation rates. So it is somewhat hard to get your finger on the pulse, but just know that the United States purposely debases the currency. They purposely try to have inflation of 2 to 3% per year. Okay, so for a fact if you hold cash over a long period of time, you are going to be losing value. So this is why the poor and middle class will stay much, much more below what the wealthy do, because the wealthy understand inflation. They understand that I need to outpace inflation by putting my hard-earned money into assets. That's why the wealth gap will continue to grow, is because the lack of education on one of a simple thing like inflation is understanding that in order to combat inflation and to protect the wealth and all the value that I'm working for, I need to put that money into an asset that outpaces inflation. So I'm not going to talk about which asset that is, but again, obviously, from watching my channel, I do think that Bitcoin is likely to be a very, very important store of value asset and potentially even global currency over the next 10, 20, 30, 40 years. Now, what has been happening? The Fed has been increasing rates to curb inflation, all right? So why do they do that? When the Fed increases interest rates, okay, that makes debt more expensive. And to be honest, the whole world is run by credit and debt cycles. So you have to understand credit and debt to be able to understand everything else. So when the Fed makes debt more expensive by increasing interest rates, what that does is that slows down people from borrowing money, all right? Which means that people stop spending as much money, which means that businesses start earning less money, which means that valuations and cash flows of businesses start to go down, which means that investors typically sell off any type of their stocks and cryptocurrencies, and that's exactly what we're seeing right now. So you can see all the way back here, what typically happens is when they increase rates, the gray right here in the middle is an actual recession. So when they keep increasing rates, we have a recession. When they keep increasing rates, we typically have another recession. When they keep increasing rates, we have another recession. Same thing back here in '08, recession. We then were increasing rates right here, and we have not, we actually had a little flash crash like recession during the pandemic, and now we are increasing rates right now, and we're waiting to potentially have a recession. Now, what is actually a recession? A recession is just 2 quarters of declining GDP. So I think we have that right here. Yeah. So we've had 1 quarter of declining GDP of negative 1.5%, which means that our economy is not growing. Okay. So if we have 2 quarters in a row where our economy is not growing, we have a recession. So to answer the first question, when do we actually going to know if we're going to have a recession? It is during this FOMC meeting right here on July 26th and 27th. So we will officially know the second quarter of 2022 and what the GDP growth was, and then we will be able to tell if we're actually in a recession. A lot of people are saying that we're already in a recession, and to be honest, it does, at least the metric that I have heard and seen, it does sound like the second quarter of this year is likely to be negative growth, which would then put us into a recession, which, by the way, recessions are completely normal. They typically happen every 6 years. So it's nothing to be worried about. Recessions are important, to be honest, to the economy and markets fundamentally growing long term. It has to be healthy growth. It can't be overinflated growth, and there has to be a deleveraging at some point, or there's going to be way too much stimulation and artificial growth in the market. So it's really, really important to have recessions. Don't think of that word as just a really scary time. It's important to plan for. And if you didn't plan for this one, there's always a next one to take advantage of it. And this is where, the wealthy will further increase the wealth gap because they understand, let's outpace inflation. Let's also tuck some cash in a place where we can take advantage of these things during a recession when we have massive sell-offs. So what, is the government doing? They are then increasing rates until this inflation number starts to go down. It has been climbing very, very tremendously since you can see from the pandemic. We started to see this in October of 2021, where inflation rates went way up to 6.2%, and now we are at 40-year highs. So now the Fed is trying to curve these inflation rates. And how do they curve them? They slow down the velocity of money, and they slow down the velocity of money by increasing interest rates. All right, and what's been crazy over the past few years, we have seen car and truck rentals up 87%, used cars and trucks up 45%, gasoline up 45%, fuel and oil up 44%. Okay, other motor fuels 32%, housing prices up over 24%. We have seen insane increases in prices of things that people need to use every day. So the second question we need to answer is, when is the market and the Fed going to stop increasing rates? Because when the Fed stops increasing rates, that's likely when we're going to be able to see, once they start to decrease rates, then we're going to be able to climb out of a recession, because then they're increasing the velocity of money and people will spend more money, they'll borrow more money, and then we will be able to likely get out of a recession. That's what typically happens. The Fed will either print money or they will decrease interest rates to start stimulating the economy in order to get out of recessions. And that's what we need to start seeing. But to be honest, we've been at close to 0% interest rates for a very long time, with the exception of from 2016 all the way up till 2019, we've been at or near a 0% interest rate for quite some time. So I'm not surprised that they are starting to increase rates, because we've been at a 0% rate for a while, and they also need to curve inflation. So now, what is going to cause the Fed to stop increasing rates? We need to find out what has the largest impact on inflation. And in my opinion, I think oil has the biggest impact on inflation. And it's not just because oil is 3% of GDP right here. Okay, that's really not that much. but it's really because oil is basically in everything. So it's not a volumetric impact, but it impacts price of almost everything, because an increase in oil price is not only seen at the gas station, but it's also felt in virtually every single good and service, because oil is used for everything, transportation and energy, right? So a lot, there's different types of energy, obviously, but oil is a very significant portion of the energy sector. And every time that you go drive to get something, so any type of transportation, anytime you're ordering, a good, or maybe, to provide a service, you have to go somewhere, or that provider has to then take their service somewhere, they have to pay for all of the prices at the gas pump and for whatever type of fuel that they're using. So it indirectly affects the prices of nearly everything. So the question is, when will oil actually bottom? Well, let's go back to 2008. Oil went on a blow-off top during the last true recession that we had in 2008. It topped on July 14th of 2008. Now let's look at when the stock market actually topped. The stock market topped in October of 2007. So when was the top for oil? If we look at right here, was the actual top of oil, which the U.S. stock market was already had a 20% sell-off before oil started to actually collapse. And then the stock market subsequently went down, 57% from all-time highs. So we need to be watching oil right now, because this move was absolutely massive. And again, it came after a 20% decline in the stock market in 2007 and 2008. And then oil went on a blow-off top and came down 77% from all-time highs in a very short amount of time, in about 180 days. So literally half a year, in 6 months, it came down 77%, which is absolutely insane. So let's go ahead and just look at where we're at right now. We're going to look at oil right now. We are starting to get definitely a little bit shaky up here. We've seen some really volatile times in oil over the past few weeks. And especially right now, we're starting to see 3 weeks of a downtrend right now in the price of oil. And let's go ahead and see where we are at with the stock market right now. Let's see if we're close to a 20% off all-time high, which I know you may not be able to see this right now. We are at a 22% from all-time highs in the stock market. So right now could potentially be where oil may be topping. But obviously there's multiple factors that impact that. History does not always repeat itself, but I do believe that the Fed is going to continue to increase interest rates until oil and other energy prices come down, because I do believe that they have the largest impact on inflation. And once energy prices do come down, I do believe that is going to be somewhat of a bottoming signal for people to realize that they could start to go, purchase discounted assets at prices that we're probably going to be very, very excited about. So while I am currently buying Bitcoin and other assets, I'm not going all in on assets right now, because I don't think that we're at the all-time lows or the local lows that we're going to see once and if we do jump into a recession. But I am starting to dollar cost average that I do believe into assets that I do believe are going to do well over long periods of time. But I still do believe that there is more downside ahead, and likely a lot more potential to do this thing called buy the dip. All right. So I'd love to hear your opinion on what you think about these energy prices, when you think the Fed is going to actually stop increasing rates, and when you think we're going to see a bottom in the market. Anyways, I really, really appreciate you watching this video. If you got value from this video, I greatly appreciate you hitting like and subscribe. And also, if you think someone else would get value from this video, please go ahead and share it with them. All right, thanks so much for watching, and I'll see you here on this next one.